Hey, what's going on, guys? This is the end of the week. This is July 7th, the 3.5 day week, with obviously the 4th of July being on Tuesday. So the markets were closed Tuesday. We had a half day on Monday. And yeah, overall, the week I was looking for more of a risk-off approach and really just ideally looking for the base hits and not worrying too much about my weekly P&L goals that I normally like to hit and before calling it a week. So today I was already up some I was accepting what I was up for the week come in Friday, right? Meaning today. And I had a couple stocks on watch. One of those stocks would be JPM. So JPM had a huge resistance range here, stretching all the way back to the early 2022 March range of resistance, right? And then we obviously stretched this into 2023, early 2023, same resistance, same resistance, same resistance, and then eventually a false breakout into the end of last week. And then we get this absolute blood in the markets. If you go over here to SPY, yeah, so in SPY, we kind of get this, breakout and then this digestion off of these two bars on a diminished spread. This is your Monday print. That was the half day of this week. And then Tuesday we had off. Here's your Wednesday print. Wednesday looked kind of like just a double inside bar and then a massive gap down. So we gap down into Thursday. If you head over to JPM, we also kind of gap down into Thursday, right? So ideally, guys, I didn't want to hold too much weight to a false breakout within the chart itself, just for the fact that the overall market saw a lot of blood into the open on Thursday, and JPM had a very healthy recovery and was 100% on Thursday, one of the more relatively strong stocks out there, because there was a lot of stocks just knifing through support down, underlyings down, 4 to 7%, and JPM actually closed as a hammer candle off of the daily 21 EMA down here and reversed into the end of the day, right? So that is very key when looking at your watch list and understanding the relatively strong and the relatively weak names. So we put in a very aggressive higher low from down here, higher low, higher low, higher low, higher low, higher low, and then a very aggressive higher low. So obviously JPM looked pretty primed to break out uh, after we closed Thursday and closed this as a hammer looking candle. So that's your daily chart perspective, and then we obviously gapped up a bit into this resistance slash support range, whatever way we claim it is going to be which way it really works out. And we found a resistance in pre-market with a triple top leading off of this range right here, which is the 144.40 range, whatever you want to call it. It was a very clean base over this. You push up, you get this very large extending sell wick all the way from 145 down to 144.26, and this all happened within the span of a 5 minute bar, right? So massive breakout off the open, come back down and to retest this range. And what we do, guys, is we just start basing and basing and basing and basing and basing in the midst of pre-market high, these swing highs off of pre-market, basing, indecisive, right? So I wasn't exactly too worried about catching a long based off of just this ugly looking base with all these sell wicks extending from, half of the bar, more than half of the bar off the 5 minute open. And we were kind of just trading within that range for a very long time, guys. So Uh, One thing that I really want to talk about with JPM and the overall trade that I saw and the trade that I liked was a clear sign of strength, meaning these aren't signs of strength. These are bars closing slightly above with extended higher sell wicks, bars closing slightly below VWAP as well as this pre-market high range. And overall, it's a little bit indecisive. And then what we start to get, guys, is I alert this at 10:20 a.m. 10:20 a.m. would be a break out of the range and a base over the previous range. Now, one thing that I would like to touch on, guys, is this. That entry that I did take on JPM was this 10-minute candle open base over the previous 10-minute or hour or no, I'm sorry, not 10-minute 10 o'clock hourly candle open base over the previous hourly candle close as well as pre-market high. We obviously wicked down, wicked up, and kind of stayed afloat of that pre-market high and hourly close level right here. So this is the new print. We started to really show signs of strength as this got pushed down and pushed back up as a hammer. And then we really start to break out of this range and retest the highest candle close. So candle closes are very important. That's why I always say wait for your candle closes. This held trend very well. We never really established any sort of break of structure. We continued our structure across the whole way. We were still within the chop range. So one thing that I want you guys to really understand about stocks and their the ways in which they move is we have a very well established range from this high all the way to this low. And ideally speaking, through the behavior that we analyze throughout the day and throughout as price action develops, now we have established a range in which we're on top of the other range and we're still within this wick, right? So this wick right here played a very key role as to being right under, like right where sellers were really sitting at, trying to push this down, and where buyers were kind of sitting above the previous range, trying to keep this up, right? And it kind of just based, and then you kind of get your pullback right here. Your pullback then results in a hammer candle followed by very fluent continuation, and then obviously we get our minor sign of strength right here above these highs. So right above these highs, guys, we get the pullback on nice low volume with a very healthy breakout candle look on this 11:20 or this 11:30 candle. And then, like I said, you get this shooting star candle up here at the top of this wick, as well as the next bar after that just really retests into the top of the range with a sign of strength look, and then an inverted hammer on the green side, low volume inside bar. It really does favor that continuation upwards whenever you see an inside bar followed by a previous bar. That previous bar was a counter trend bar, but all that was really a bar that really favors continuation through it being an inside bar. That means, they really try to send the stock down, and then that next 5-minute bar that really forms within the range of the previous bar on low volume favors that continuation for the upside, especially after you get this extremely high volume push out of the range. Any kind of high volume push out of the range with a very healthy candle close above and beyond the range in a pretty distant way, then you're really going to get that retest and see that continuation up. So that was the intraday price action for JPM. Um, it was a pretty clean trade. I was pretty bullish on it. for the whole entire week, considering that we kind of based here and then the markets did unfortunately gap down. They gapped back up, and as you could see, as I was talking about, the markets were really, really bleeding. A lot of equities were really, really bleeding. I believe the SPY was even pretty red. Yeah. And then everything kind of saw a rally, but JPM actually closed green, which is huge, as well as this saw less of a sell-off and pretty much more of a rally. So that was very key to really see on JPM, along with this nasty push up right at 5 a.m. this morning, and then obviously a reclaim of that range, a base over the pre-market high. You break out of this particular range with the higher volume sell wicks at the 15-minute orb, and then after that, what do we get? We get this nice continuation. And when you really, guys, when you really zoom out, look at the larger time frames, look at what really matters, and don't get yourself too caught up in the 5 minute time frames. This was a nice push up, a close above, and then a neutral bar in the 15, followed by a breakout of the range, and then a trickle upwards. And then all of a sudden, it's just a breakout once you get back into your 5 minute look and you see us taking out this range up here of these wicks and then pushing above on breakout volume and then retesting on, seller mitigation volume. So, very clean trade there. I did take the 7 day till expirations. I actually got shook out of my position, unfortunately, right here. I was green a little tiny bit up here, and I got in like right over here, and I was just chopping around. And then I said I was looking for a pullback. We actually did get the pullback into the 21, followed by a hammer candle. And then obviously after we started catching some of this momentum, especially with this kind of breakout volume look, as well as the retest after on really low volume, that's definitely your sign to go long. So it was a safe position. It was, like I said, a 7 day till expiration. And when you really look at this hourly trend, you can even take off your. There's really nothing stopping us on this push up, at least to this general gap up here. This resistance here was more or less just a chop range and a very like a very choppy sideways kind of day on Wednesday. So I wasn't really putting too much weight onto this resistance that was sitting here. I was looking more and less for a decent push and momentum into the gap, and then eventually just, I mean, I don't expect JPM and financials and things like that to really push crazy, um, especially with a bloody market. I don't think financials are in the current conditions to really see extremely strong strength. So, yeah, that was the JPM trade. I think, guys, your targets could have been, you could even really pull a Fibonacci from this high to this current swing low and start scaling out as you get. I mean, actually, this wick up here that it extends to these highs was a test of this resistance as well as this 618 swing high to swing low. So that explains a lot as to why there was those sell wicks off the morning. And then obviously that push right back up and above, you could really start targeting this gap or a particular level within, half. Sometimes I'll start looking for a 0.50 move, like a kind of like a halfway move through the gap. You never really want to hold for the gap though, guys. So yet again, remember, this level doesn't hold a lot of weight to it. I don't have a lot of weight. I don't really have a lot of, I don't think that this level is necessarily extremely relevant. Therefore, when we push up and we get that retest, I'm not going to be extremely pleased with continuation. If we do see it, I'm not going to be like, oh my gosh, that was so clean, because these kind of levels, guys, I do not necessarily respect as much while I'm in a trade as other very, very, very key levels. So yeah, we'll go over to you now. So there was a couple opportunities I missed actually that I really wanted to take, and I kind of want to cover these with you guys real quick. I did take SPY. SPY was a push up in the open, obviously a push down on right for the higher low right here off this deeper retracement into this order block near this like 439 level. And then we obviously push back up. We get that test, and then we get an aggressive higher low right here with a really tight range establishing off of resistance. So we push up. We kind of seem to be looking like a false breakout, and then we kind of flag with four this four touches of resistance right off of the 440 level is going to really create that path of least resistance, really diminish the supply off of the 440 level. And then once you see that entry into the gap, after all of that supply gets diminished off of four tests, along with a diminishing spread as we head higher into the gap. So higher low. We have a wider established range, and then we kind of get real tight right here. Then this obviously starts to look like it could be supply being diminished and a creation of least path, a creation of a path of least resistance, which would then obviously squeeze through and start really seeing fluent price action and really nice movement by bulls into that gap to really fill something that would come up to here or potentially up to the whole entire gap. But like I said, guys, I don't really expect gaps to necessarily always fill fully. So that's another thing that I want to touch on is, like I said, gaps never really fill fully and cleanly for weekly options or bi-weekly options. You normally don't want to really stay greedy in gaps. So we'll head over to U now. U was taken. I took U right right at 11:50. Okay, so the 5 minute on U, what it was, guys. And this trade was a little bit rushed, and I really want to touch on this one because I did lose for a 17% loss. Um, Today wasn't the best day, but it was also just because I was not necessarily satisfied with my weekly P&L heading into the end of the day on Friday. So I probably did have that sense of forcing a trade. I don't think the setup looked absolutely terrible, but I definitely was impatient and I should have just stepped away and really, called it a week. If any setup doesn't present itself, it's better to not take anything than lose, right? So that's what's going to keep you in for the long game. And this was totally on me. What this was, guys, it was a push up off the morning. First of all, we'll discuss the daily chart. So U's been a hot stock all 2023 with this 2 month, 3 month long accumulation. Actually, it's been quite some time before that, but this really tight range down here has been like a 3 month accumulation, and then we've kind of been getting these higher lows put in place on this daily as we move higher. And this was also a golden pocket retracement down here, guys. So absolutely parabolic looking volume to push to the upside. Obviously got stuffed by digestion. That digestion obviously then turned into a lack of demand. We then push down. We start finding that demand off of this 21 EMA on the daily range as well as the golden pocket range, the 0.50 fib to the 0.618 fib. We do have a 21 daily EMA sitting like it was at the time, sitting I think up here. So we're going to dive deeper into what I really messed up on this trade. So first of all, guys, if you really want to head into the 5 and look at this, you're already going to see probably what I saw, which was this cup and handle look, which I'm not a big fan of patterns, but it looked like a cup and handle slash bull flag, whatever you may want to call it. But what I was ideally looking for, guys, was what I saw, guys, was this push up, decent volume, push down, really, really sl slight and tiny momentum by the Bears here, followed by these aggressive pushes by uh, Bulls on really, really high volume that looks like it could be heading for that breakout, right? Um, Now, a couple things that I really want to go over. First of all, it was right here where I really said it's getting hit with volume. I'm going to see what happens. If nothing, then calling it a week. What I really ideally should have waited for, guys, was keep in mind this is the daily 9 moving average, or 20, I think it's the 9. So when we push up and we start trading flat at a 3, one test, two tests, three tests, that is a major red flag as volume. What it can be, guys, is volume on a Friday can be revolved around de-hedging, any kind of MM activity that is really taking place where they're de-hedging positions or whatever they need to do to get things expiring where they want them to be in regards to um, where the stock is going to be closing at for the day. So, I mean, rel this could be really anything, guys. This is disgusting breakout volume, but volume is technically lagging, and that's one thing that I kind of really messed up on here was, first of all, what did I first mess up on? I'm trading this at noon. So that's not something that really falls under my edge. Nobody's edge actually. So nobody can really profitably trade at these times, especially names like this that really, really, really lack liquidity. They don't necessarily lack liquidity so much, but they lack liquidity rather at Wall Street lunchtime, any time past noon for Eastern Standard Time. And yeah, overall, if this isn't the hottest stock in the market, it's not going to really see realistically that excessive breakout past noon, just on average, uh, as you really consider the daily average volume and overall the the average ATR of the stock. So the ATR has been spread out a bit, but liquidity does dry up, guys. So keep that in mind as well. The stock has just seen disgusting moves based off of that Apple partnership with the VR headsets and all that kind of stuff. And after you really get a massive event like that, like I said, at that top of the trend, we really had those two digestion candles on low volume that resulted in a small leg down to the golden pocket retracement for the higher low on the daily. Well, what does that really tell you guys? That tells you that demand, meaning the buy side liquidity, got really, really soaked, really, really dry, and eventually needed to really push down the stock. The stock needed really a push down to find that demand to push higher. So that's something I really should have considered with a stock like this. Um, I think my only traders should, after noon and into the lunchtime, should be really primarily tech and indices because that's what I'm best with and that's what I have most experience with. So guys, if you have a plus setup on watch and it looks like it might be playing out, but it's going into noon on a 3.5 day week of a Friday, I probably wouldn't touch it. So that's the very first thing is hands down, I shouldn't be touching it in general, along with, like I said, I mean, this could be market makers really pushing that ask for a short amount of time, which could be weird, but if you never really find that level of support after it really sees that breakout or asks necessarily pulled, then you're not going to see that nasty breakout. So I probably should have waited for it to base above these highs to confirm a long entry. And I think I took a position like right here and it really, really chopped. And then obviously I started to get smoked as we pushed down. So I probably should have cut as we lost VWAP right here. I think I cut at the $41 level, below the $41 level, which was kind of like this bear flag looking formation down here. Guys, I also, one thing that I want to talk about is, what was it? Oh, keep your risk really tight. Don't let ego get to you, and don't take a absolutely massive loss. And another thing that I want to talk about is don't be too rushed to trade the zero DTEs and the terrible spreads. I did take a 7 day to expiration on this position, so it wasn't too bad of a loss. But I did definitely get a little bit greedy with it. Started in trying to potentially maybe swing trade, and overall the trend just looked like a daily 9 EMA touch or a hourly 21 EMA touch into a gap. And into a gap isn't necessarily my edge either, so overall the trade didn't really fall under my edge. I was probably seeing a little bit of a sense of FOMO considering I wasn't up anything special for the week, along with the 3.5 day week. I need to really understand where the risk reward is really taking place, like the very good risk reward trades, and they kind of already all happened for the day, guys. So I missed a couple opportunities that I didn't want to pull the trigger on zero DTEs. One would be this very nice break of structure on NVIDIA, a loss of our moving averages, along with a retest right here for a higher low and a retest of the break of structure. This was a push down off of a massive level of resistance with a sweep of the highs. So pretty clean opportunity there, but I was already off for the day and missed the whole end of day sell off. So that's that, guys. I also missed this Netflix play, or that happened right here, as well as I believe Nvidia at the top of this range break, high volume breakout, consolidation above the previous range of internal liquidity. Then what we do is we start pushing up. Perfect long entry right here for a scalp up to this high day on a zero, but like I said, risk was off for the week and overall just looking to get by and survive. So that's it, boys.